So we sort of reformed our business over the last 4 years, and about 2 years ago we started thinking about our strategy around where do we see not just blockchain but disruptive technology. I think Matt talked about it, I think it was mentioned earlier. It's not just about blockchain technology, it's about all the disruptive tech that comes through, and a lot of it applies in the construction industry, so IoT, obviously, drones and AR and a bunch of other stuff, and obviously blockchain DLT also applies. Our business is focused on 3 different areas, or 4 different areas it says there, which is we're building an asset management firm, which is a 21st century asset management firm that will invest in tokenized assets. So what we're seeing is financial services as an industry is not going to change anytime soon. Even though they get lip service to blockchain, really the reality is they're not going to long. And so what we're doing is building a sort of company in there that will capture this emerging market opportunity. We have a ventures business, and this is one of the things I'm going to talk about. One of our ventures, which is in asset tokenization, so real estate tokenization and what we're doing. So we have real projects with a real construction real company that has a staycation business. They've been around for 2-3 years, and I'm going to talk about some of the things that we're doing and some of the challenges that we're having around actually tokenizing a real estate. So let me just start by so just to talk about tokenized real estate. Does everybody understand what tokenization is? No. So let me start there. So if we talk, I like to talk about things in context of what things. I like to talk about things in context. I'm excited about tokenization. Explain the business problem we're solving and what a token is and what it helps to do. So if we take real estate as the example of property, one of the biggest challenges around property is the way you invest in property and manage property, and where you invest in projects and construction projects is really crude today. So if you do not REITs or ETFs, real estate investment trusts or ETFs, exchange rate funds. So if you wanted to invest in property, then the way that you do it right now is you buy a unit trust, a property fund, or you buy a REIT, a real estate investment trust, where somebody pulls together a whole bunch of property and you buy a share in that property. But the way that you trade it, the way that you can buy and sell parts of property are, you can buy a share into a REIT, but actually REITs themselves trade at a discount because they're not liquid. You can't actually sell a fraction of a particular property. You either buy a share in the portfolio they give you, or you don't. It's simple as that. And so if you imagine the ability to, one, fractionalize any business, in this case, let's talk real estate, a building like this one, and say, well, this building is worth 200 million, there's 40% debt on it, and there's 6% equity. Right now, the investor will own this building. I don't know if it's UCL owns it, but let's assume UCL owns it. The ability to actually extract that cash and do something with it is you can't do it. And the ability to sell part of that debt, for example, it's 40% debt, you can say, well, I've got the debt at the bank right now, but I'm getting a better deal over here, can I refinance it? Well, to actually do that, it's a huge amount of cost and time. So what you can do is fractionalize that into different types of financial instruments, and in this case what a token is, and be able to then have an exchange which provides liquidity, i.e. the ability to trade that at any point in time. So a token is basically a representation of a fractional ownership or an economic benefit of an asset, and in this case real estate. But it goes further than that. So if you have a token, in that token you can wrap around a bunch of rules to say, I'm going to pay those bunch of token holders £5 every week when the temperature in the building goes up by 3 degrees. So right now, if you have a share in a company, you can't do anything with that. With the token, you can wrap whatever rules you like around it, and whatever benefits you want to provide to the investor. And obviously, they can pass that on more easily. They can trade that. So, for example, if I have a family office, I've got, say, 10 million of the debt in this building, and I want to get income for 2 years, I can buy that token, which gives me that income from the debt. And if I want, I can then sell it off. So tokenization is effectively a new type of financial instrument that you can create. And that's just one example. So, it's talking about all sorts of different types of token you can create. And tokenization it's not just about real estate assets, it could be supply chain. So if you're moving, one of our other ventures is in LNG, liquid natural gas, where a token represents a cargo of LNG, liquid natural gas, moving across the supply chain. Where you could wrap a whole bunch of data around the price of that cargo, the title ownership of that cargo, the risk and insurance for that cargo into a token, which then represents the movement of that cargo moving across the supply chain. So in the construction industry, similar, you could wrap around a token around a piece of, I don't know, a block of concrete moving around, for example. Right? So tokenization is the ability to attach a value and rules around a particular asset. It could be a physical asset, like real estate. It could be a digital asset. So if you heard of CryptoKitties, anybody heard of CryptoKitties? Type in CryptoKitties and read about that. That's an electronic cat. Somebody pays $100,000 for one of them. Right? Yeah, I laugh, you laugh, but it actually brought down the Ethereum network because the volume of transactions that were going through. So does that help? Does that make sense? Have I explained it well? Great. So a lot of the stuff here around tokenization is perennial problems around financial services that have happened. I mean, it's been going on for years. That it's very difficult to trade instruments. It's very difficult to settle them and hold risk. Right? And it's only for sophisticated investors. It's only for professionals in the financial services industry. And there's a whole bunch of intermediaries like banks who sit in the middle to provide that service for you. Now, one of my contentions is that actually, why do you need a bank? You could build these tokenized models and actually directly have investors deal with property owners. You don't need a bank in between. So disintermediation is one of the key benefits. Another benefit is, I mentioned liquidity already, another benefit is liquidity. So you can remove intermediary fees where banks will literally just assemble this stuff and sell it. You don't need that. The whole movement and settlement, so if you buy and sell a token which represents an asset, today you would go to a broker, or you have a stockbroker account, or you go to a bank and they say, I want to sell that property or corporate finance to you, and it'll cost you £500,000, £1 million if you've got this building, 200 million, it'll cost you £500,000 to sell it, or to do anything with it. So cutting all of that cost and all that inefficiency out is also part of the, not a side effect actually, of a major benefit of a tokenized asset. So, yeah, I'm not going to read it out, but I'll sort of explain that already. So tokenization is already here, really. It's very early days. I'm not going to say to you it's all mature, but there are lots of startups, I'm sure Matt will have spoken to lots of them, around some technology innovation they're building around blockchain. My view is that unless you deal with the business, a lot of the things you talked about, which is a strategy, adoption, the issues around how do I take my legacy system and be able to use this kind of stuff. These are all the issues that we've been working on our solution side of the business, which is helping organizations think about how they're going to transform the business with all of these technologies, including blockchain. So for us, it's where we start generally. We don't start with the tech and say, what's really sexy blockchain stuff. We say, okay, what business problem are we trying to solve? And if they don't understand it, help them understand, hear the business benefits, define key use cases. And if you look at some of the things that are already happening, there's lots of these ICOs that have happened. So all of these, in fact, have done their ICO recently. All of them are sort of real estate ventures. But the complexity of actually a lot of my technologies, so these guys are very, Harbour is, I would say, that if you wanted to know guys who know what they're doing, I would say Harbour, obviously that's, what they do. But the key of this is, you can take tokens and fiat is dollars, pounds. So in the crypto world, we call it fiat is dollars, pounds, euros. And be able to tokenize anything, really. And these are some of the classifications. So our venture in asset tokenization is around real estate, and that's what we're doing right now. We're tokenizing a real business, and actually not just tokenizing the real estate, but actually looking at their business model and saying, okay, what would that look like if it was a tokenized business? What would the business benefits be? Is it tokenizable or not? Right? It's not just about saying, hey, let's do it. It's about saying, well, does this make business sense? So this is one of the key things for us is you can't tokenize everything. I have people come to me and say, I want to tokenize that. What for? It doesn't make any sense. Right? Real estate makes sense. Real estate, there's a bunch of different business problems that you can solve by tokenizing real estate. And there's some of these people are focusing on how to do that. So, the nice thing is that real estate is huge. Assets are huge. The market is massive. And this is just about existing real estate. another kind of assets, right? So the market is massive. This doesn't sort of talk about projects, construction projects, and actually creating, like the HS2, for example, and tokenizing that and being able to finance that set differently. Those kind of project finance things are actually quite difficult, they're quite complex in how you finance it. And investors are out there, generally you go to asset managers, you go to institutional investors to raise money. Well, actually, there's a huge pool of assets out there, trillions of dollars, where sovereign wealth funds, high net worth, family offices, pension funds have huge amounts of capital, frankly, doing nothing. And one of the problems right now is that those investors are basically tired of getting wealth managers and asset managers with their money because it's not providing return. They're providing a whole bunch of friction in between. So if we take all of this opportunity, you can see it's an attractive market. Now, the problem is that actually this is hard to do. It's difficult to do, there's a lot of complexity, a lot of unknowns. It's not a simple thing, there are a lot of unknowns, and unfortunately, depending on your point of view, they're the kind of problems we're trying to solve. So we're trying to figure out how can you successfully tokenize a real estate business? How can you finance a real estate project differently? How can you take a hotel group, so we have a family office dealing with one of our second projects. They have 10 hotels. They're an Italian family office, and they've gone to the bank and said, we want to refinance our portfolio. And the bank says, sorry, we can't lend you anything. They can't do it. They can't lend them because the bank's balance sheets are screwed. But there's not a shortage of money out there. There's not a shortage of capital looking for investment. It's the fact that today the banking world is screwed. So the opportunity is huge, and some of the benefits I've talked about already. But at the end of the day, it's really simple. Investors want returns for their money. If they could have liquid access to the kind of instrument that lets them get the kind of return they want with the risk profile they want, then they invest. It's relatively straightforward. Real estate, every family office, every sovereign wealth fund, every high net worth loves real estate. Right, so one family office I'm dealing with has $1 billion of real estate. And I went to say, look, we'll tokenize and give you liquidity in real estate. Wow, can we start? Because even if you give them 100 million of access of out of their billion, they can do a lot of other stuff with 100 million. And there are investors out there who'll invest in that 100 million because they will return. So, some of the other things are things like this, right? In financial markets, investment, if you own a unit trust or you have a pension, you invest in a fund. Right now it's very crude how you invest. You invest in a unit trust and they invest the money for you, and you let the fund manager control your money effectively, and hopefully they'll give you returns. So when you retire, you'll have enough to live on. Right? Which is actually the way that these guys invest is very based on low risk, listed markets. So it's a really key point. Listed markets, which is shares which are listed on an exchange somewhere in the world. Right? Real estate is not a liquid asset. If you build this kind of stuff as we're doing, you can provide a liquid asset to an investor. Right, so what are the complexities? Oh, yes, okay. So how does it work? And this is part of the things we're trying to figure out. Right? I'm not saying we know the answers because we don't, okay, but we've got people in our team who are experts in, who are lawyers, who are token economists, who are technologists, who are real estate people, and all of those together, we're trying to figure out how is this going to actually really work. How can you tokenize that? One of the biggest challenges is the fact of the legal standing of a token itself. What is the legal standing of a token in the UK? Well, there isn't one. So if you hold a token in a real estate, let's say in this building, then actually there is no legal standing to say if you went to a court and said, I have a token in this building, I want my benefits. The court will go, well, sorry, what's the token? There's no regulation. Now the good thing is, in some countries like in Germany, in Switzerland, in Malta, in Gibraltar, so some of the countries around the world are actually creating regulation and they would legalize a token of what that means. So, everybody know what an SPV is? Right, so an SPV, so what we're doing at the moment is looking at an SPV structure, a special purpose vehicle structure, and there's a bunch of law around what that is, which represents the ownership of the physical asset, and that SPV is then tokenized. So effectively, you have indirect economic and legal benefit and rights to the underlying asset by the SPV. So in some countries, so SPVs are common practice in most countries around the world. But that tie between the token and the SPV is where some of the issues are. Where is that legal? And how can you go to court and say, actually, I've got a token and that SPV and that means something. So the countries I mentioned are some of the countries which are already looking at that. So one of the other bits is, well, how do you hold the tokens? So if you're talking about $100 million worth of tokens, pounds, whatever, in this building, whoever has the key to access the tokens effectively can do anything with it. They can sell it, they can put it in another wallet and own it, and you can't do anything about it. So one of our other ventures is on what's called custody, which is safely storing these tokens on behalf of investors or owners of those tokens. So you can't just willy-nilly go away and sell those tokens. So I won't go into the detail. If you take the photo out, I'm sure we can share the slides if you'd like. But this is some of the legal things we're thinking about, figuring out. How do we actually create a legal structure that's going to stand up in real life? The other bit of it is around, okay, well, for this company that we are tokenizing is, can we tokenize their business model? So they're a staycation company. They have sites in Devon, they're building another site in Pickering in Yorkshire, and it's a staycation. You go and you rent a room for 2 days, like Centre Parks or Forest Holiday. It's a similar kind of company. And so we're thinking about how do you create a tokenized model for that which will scale globally. So the current form of that is a timeshare. Okay? That's the current form. You have a timeshare and something, you have to put a bunch of points, you buy those points and you can use them for, we're evolving that to the next level and say, okay, what does a tokenized model look like for that? So it could be, for example, if you hold the token, you're a part owner of the business itself, and you get the economic benefits of that business. So tokenization is not black and white. Because of the flexibility of what you can do, you can actually invent a whole bunch of different ways of creating tokens. So you can have a token for the debt, you can have a token for the equity, you can have a token for the land. Yeah, so if somebody wants to own part of the land and get the leasing rights of the land and get an economic benefit of that, you can build all of these different tokens which assemble into a financial instrument, if you like, one financial instrument or multiple financial instruments. But you have to get the fundamentals right from a business perspective, which is this is a legal representation. From a technology perspective, you need to build some technology, build what's called a ITO, a token offering platform, which allows you to create the tokens, account for the tokens, manage the tokens, and know where they are. And in the old world, or the current world, it's a simplified way of a share register. So if you have Equinity, they do share registers, they'll share registers on behalf of companies. That's sort of the ballpark of the accounting piece of the token. So what you do is you create what are called smart contracts. And a smart contract, in its simplest form, is just a bunch of rules that says how that token, what that represents, and what, in this case, real estate, what the economic benefit of holding that token is, and how can I spend it. Now, tokens, I didn't actually describe the variety of different types of tokens, but there are a whole variety of tokens, from a security token, and it's sort of similar to having a share, to a utility token, to an act token, and a whole bunch of different types of tokens. Now, there's no definitive way of representing tokens. This is just emerging right now. Right, there's lots of different types of tokens, token structures, and token models. It's not defined yet. There are some keywords like security token and utility token. They mean different things, and I won't go into what they mean right now. But this is just an example. You can see here we have a smart contract that's telling you the economic benefit you get of holding a particular token and what you get if you hold it. So what are the challenges? I've talked a bit about the regulation. So a lot of people focus on blockchain around land registry and saying, well, if that land registry and that's not tokenized and that's not on the blockchain, that means that you can't hold the title for the asset. Well, let's be honest, for a long time we're going to have this hybrid world. This hybrid world, the old world and the new world, is not going to happen and change overnight. It's going to exist for a while. So being able to have the ability to bridge those worlds is one of the things you have to do at this point in time. It's not going to change one or the other. eventually all the land registry will be on blockchain. It'll be on a ledger, and that's what's going to happen. But it may be 5 years before that happens. Right? But regulation is obviously a big barrier here. Regulation is a big issue. The legal side is an issue as well. Being able to, I mentioned already, talking about platform and the technology. There's a whole bunch of technology that needs to be built, which is one thing we're building, is the technology to hold this. And again, that's to do it properly, and if you're doing it as a financial instrument, what's going to happen is you're going to get regulated at some point, audited at some point. So therefore, you have to make sure that you build proper structures so that when the FCA eventually in the UK wants to audit it, they can come and say, what are you guys doing? And you can say, hey, look, here it is. We're building a compliant infrastructure to make sure that we're doing it properly. So that you're regulated and you know that you're not going to get fined or banned or whatever. Data and security is a big one. I talked a little bit about data, so let me just give you an example around real estate. So, if you buy a property in India and it's tokenized, let's assume you can have a legal structure token in India. The ownership of that asset and the token representing the asset has to stay in India. You can't move the data outside of India, it's got to stay in India. That's what the law says. So even if you're a UK listed, you're a UK company that wants to own property in India, the data around that has to stay in India, and the ownership of that stuff has to stay in India. You can't take it out of the country. So you've got to build the structure to be able to handle that kind of complexity. So in every country around the world, the whole data piece, the KYC piece is unfortunately really, really complex. Every country has their own rules. Every country talks about data in their own way. Okay, EU with GDPR obviously mostly the same. It isn't actually the same in different countries. But these are the kind of challenges that we have. So, we're solving these problems step by step. This is the key here, right? I can't tell you the answer right now. We broadly know what it looks like. We know about the technology and how to build it. We know broadly where the regulation is going. But this is all a learning experience for us. Now, we get that right, hopefully we will, then we've got a framework, a model, being able to build a platform that can put real estate in one end and the hopper, and at the other end comes the token model and all the other pieces you need to buy to provide the real estate portfolio. So that's what we're going towards, building that platform. I think that's it.